seconds there. 2024 has been extremely strong results on both sides of the ledger, on fixed income sides, on the equity sides. And I remember very quickly that 2024 didn't start off the pat very quickly. We had obviously a lot of concern about inflations, interest rates, equity valuations actually were questions. We even talked about recessions. So this and geopolitical mess, obviously with Ukraine and whatnot throughout the globe. But despite all this, 2024 was extremely strong results, upwards to double digits return. Can you touch base? I don't want to rehash the past too much, Philip, but can you reiterate a little bit what provided to those strong results last year?
Sure. I think it comes down to a better economic environment. And if we go back 2 years ago in 2023, there were concerns of a recession in the United States, although we didn't see many signs of recession. The way we described it was 2023 had, say, a rolling recession. We had recessions in part of the U.S. economy, but not the whole. So we saw manufacturing slow down. We saw housing slow down. For a brief period of time, we saw retail sales slow down. But this didn't lead to a full-blown recession. And what a full-blown recession includes is high unemployment. And you didn't get that. And the reason we didn't get that is because we're in a demographic we're seeing a demographic shift where we have a number of baby boomers that are retiring, and those that are coming into the workforce aren't replacing them. So we don't have as many people coming into the workforce as those leaving. So that's kind of the challenge that or not challenge, I would say the opportunity that we've seen. I apologize. That's my computer going. My team is pinging early in the morning. So when we think about what happened in 2024, well, we were set up for, if you want to call it a soft landing, but let's just call it an improving economic environment where corporate profits were increasing, recovering off of the minor pullback in profits in 2023. And we did have a positive investor sentiment that helped drive valuations higher. So it was a combination of two things. Strong economy and markets that were responding to that led to the gains that we've seen in the marketplace, not only in the United States, but we saw it in Canada, we saw it in other areas around the world, and we saw it in fixed income. And that's as interest rates on the shorter end of the curve came down and the longer end of the curve started going up. So, all in all, good year. Balanced investors saw returns in double digits. Equity investors, higher than that. Even conservative investors on a year-over-year basis saw a very, very attractive return on their investments. So, it's one of those things that they happen more often than we think. And it was a year that was better than we expected.
It's also good to see a little bit of return on the fixed income side, because it's been a while since we had what I would call positive return on both sides of the ledger in fixed income and equity. So it's actually good to see a little bit more, rebound on the fixed income side.
That's exactly it. And this is, we call it a normalization of the fixed income environment, where long-term interest rates are hovering in the 3.5% to 5.5% range. And shorter-term interest rates, as we know with the Bank of Canada, they're coming down. And as those short-term interest rates come down, that is providing some relief for those borrowers out there. But longer-term interest rates are providing a suitable and an attractive income to conservative investors that are steering their assets towards bonds that are paying them in a mid-single digit coupon or yield that is delivering a return to where we were, say, 20 years ago in terms of what we expected out of bonds.
That's a very good point, and I'd like to get back to that a little bit later on because there's like the last 2 or 3 years, there hasn't really been an appetite to be like too much underweight, if you will, in equity side or overweight in fixed income because of lack of possible return. But now that, the appetite has returned, I'd like your thought on that as we move forward towards the fixed income and the interest rate, where we go from there. Listen, I would love to keep going. I know I can't keep you live online all the time. You probably have, I don't know if we're going to see you on BNN or Business News or CBC later on today, but Philip Petursson, from the Chief Investment Strategist at IG Wealth Management, is one of the top media personalities in Canada in the business community. So we very, very much appreciate your time this morning, Philip. And I would be remiss not to mention the podcasts available on our website are available through the IG website, The Living Market. And where do we stand with the podcast? Do you want to give a quick shout out to the podcast there, Philip?
Absolutely, and thank you for that. It's a great way of staying in touch or on top of what we're thinking. And every single week we come out with a new topic. It's a 5-minute podcast, right? So it doesn't require a big time commitment. You don't have to, sit down and listen for 45 minutes. It's 5 minutes on what we think is relevant or interesting in the markets today. And we've been doing this for a couple of years now. We're over 100 episodes on it. It's something that we put a lot of work into. The feedback has been very, very positive. It's a nice, easy way to stay connected to how we and the other portfolio managers that we work with are thinking.
Once again, our host, Philip Petursson, Chief Investment Strategist at IG Wealth Management. Philip and I go way back. I very, very appreciate our conversation that we have all the time and in conferences and above. But I certainly appreciate you taking the time to speak to our clients today. Thank you very much.
Thank you, Sylvain. Appreciate you having me on.
Thank you very much. And we'll log off, everybody. And if you have any questions or comments following that, please feel free to reach out to us and just send us an email, and we'll go from there. Thank you, and have yourself a great day. Thanks, everyone.